Gold is more than just a commodity. It's a symbol of tradition, prosperity, and enduring beauty. Whether it's a wedding or any other event in India, gold is given as a token of love, a tradition treasured for generations. फिर चाहे कोई बड़ा बिजनेस टाइकून हो या कोई आम इंसान हो, in India, everyone buys gold. But did you know that gold rates have been rising significantly over the past 25 years? और recently gold के prices rocket की तरह बढ़ गए हैं. Gold has touched 70,000. और ये कैसे हुआ जानने के लिए पहले let's understand the history of gold. History of gold. Gold is like the old friend you trust during storms. When the economy gets shaky or there's trouble brewing on the global stage, investors rush to gold because it's a safe place to park their money. In the present world, gold has touched rupees 70,000. Shocking, right? Some speculate it will even touch rupees 1 lakh in 2024. What do you think about this? Let us know in the comment section. But how has gold risen to the high? For this, we need to understand the history of gold over the past 25 years and what factors are affecting the prices of gold. Let's take a look. Overview of gold prices over the last 25 years. हमारे ज़माने में तो सोना कितना सस्ता था. I'm pretty sure you might have heard your dadi saying this numerous times, and at that moment, you might have just laughed it off. But do you know, she's right. The gold price during 1962 was just rupees 63, 24 carat per 10 grams. Shocking, isn't it? Coming to the present, the gold price stood at an all-time high of rupees 70,000, 24 carat per 10 grams, as mentioned before. But how is this possible? Well, there are various economic factors which bring us to our next point in this video. So without any further delay, let's understand what factors influence the price of gold. And if you have loved the content until now, please remember to subscribe. Factors influencing gold prices. Economic factors. Factors such as high inflation or deflation decide the price of gold, where it will go higher or lower. As mentioned above, the price of gold was 63 in 1962. The reason behind it was the inflation. Inflation is when prices go up and money buys less stuff. To control inflation, the Reserve Bank of India, RBI, takes steps like raising interest rates. This makes borrowing money more expensive for businesses and people. When this happens, folks turn to gold because it keeps its value better during inflation. This big demand for gold, especially when the economy feels uncertain, makes its price shoot up in India. Geopolitical instability. ईरान ने इजराइल पर मिसाइल हमला किया. ये तो आपने ब्रेकिंग न्यूज में देखा ही होगा. एंड फिर आपने ये भी देखा होगा न्यूज एंकर यूजिंग द वर्ड जियोपॉलिटिकल इंस्टेबिलिटी. बट व्हाट डज इट एग्जैक्टली मीन? It means when there's a lot of uncertainty and tension between different countries and regions, it starts affecting the economy, trade, and prices of commodities all over the world, and even the prices of gold. Remember when the COVID-19 pandemic hit the world? It felt like everything came to a standstill, right? Well, just like it affected us humans, it also had a big impact on businesses and commodities, including gold. Example, before 2020, you could buy a gold at rupees 35,220. And after the pandemic hit, the gold price was 48,651. And you know what? The 2008 financial crisis is another example of how big global events can shake up the prices of gold. Factors affecting the price of gold in 2024. Coming to the present year, 2024, just like the above global events affected the gold prices, there are some factors in the present due to which the gold prices are skyrocketing. Let's take a look at these factors. The rise in gold demand in China is playing a significant role. With the Chinese central bank increasing its gold reserves, the demand for gold is not only impacting prices in the US but also in India. Geopolitical tensions with the Israel-Palestine war that happened, or the ongoing Israel-Iran war, which has led to political instability. Gold prices has increased by 20% in just 2 months. Compared to other assets, people purchased gold very often and as a secure investment. Let's take a look at the comparison of gold with our commodities and assets in the past 25 years as well as in 2024. Comparison of gold with other commodities. As we all know, unlike other commodities, gold possesses a unique characteristic. It does not get used up or consumed. This quality imbibes the precious metal with a sense of everlasting value, making it a favored asset for many investors. Now let us take a look why gold stands up against the other commodities. Gold serves as a hedge against the declining value of currencies through inflation, making it an attractive alternative asset for safeguarding wealth. Historically, gold has delivered positive performance over the long term, with minimal or negative correlation to the performance of other assets. Gold's performance over the long term is consistent, with annual average return of about 9% over the last decade. This performance is comparable to stocks and ranks higher than Indian bonds and commodities. The global gold market is large and highly liquid, making it easy to buy and sell gold at any given point in time. This liquidity, coupled with its scarcity, has made gold a mainstream investment globally. Here's a fun fact. Between 1981 and 2019, where there was extreme inflation higher than 6%, gold prices generally increased at the annual rate of 11.5%. और ये प्रूव करता है कि gold does not lose its value over the long term. Gold is viewed as a complementary option to traditional stocks and bonds, ensuring higher risk-adjusted returns and healthy portfolio diversification. Factors such as economic growth in the emerging markets, the launch of gold-backed ETFs, global crisis, low interest regimes, and central bank demand have contributed to the surge of interest. Now that we have understood why investors or people in general like to invest in gold as compared to other commodities, let's move forward and understand what are the benefits and drawbacks of holding gold. क्या अभी is the right time to invest in gold? Benefits. Safe haven asset. Gold has historically served as a haven during times of economic uncertainty or geopolitical instability. Its value tends to hold up or even increase when other assets falter. Hedge against inflation. Gold has proven to be an effective hedge against inflation over the long term. As fiat currencies lose purchasing power, gold tends to retain its value. Portfolio diversification. Adding gold to a diversified portfolio can reduce overall risk. Its price movements often have a low correlation with those of stock and bonds, providing stability during market turbulence. Drawbacks. No income generation. Unlike stocks or real estate, gold does not guarantee any income. Its value relies solely on price appreciation, making it less attractive for investors seeking regular returns. Storage cost and security concern. Physical gold requires secure storage, which can incur additional costs. Moreover, there's always a risk of theft or loss associated with owning physical gold. Lack of yield. In a low interest rate environment, holding gold may mean missing out on potential yield from other investments like bonds or dividend paying stocks. क्या आप कभी भी गोल्ड में इन्वेस्ट करना चाहेंगे? After knowing its drawbacks and benefits, let us know in the comments. Well, let us now understand what are some of the strategies that can be used to add gold to your portfolio. Strategies for incorporating gold into an investment portfolio. Allocate a percentage. Consider allocating a small percentage of your portfolio to gold, typically between 5% to 10%. This ensures exposure to its benefits while mitigating the drawbacks. Diversifying forms of gold. Besides physical gold, explore other forms like gold ETFs, exchange traded funds, gold mining stocks, or gold futures. These offers exposure to gold's price movements without the hassle of physical ownership. Rebalance regularly. Due to its price volatility, it's essential to rebalance your portfolio periodically to maintain your desired asset allocation. Conclusion. Looking forward, even though things might be uncertain now and make gold prices go up and down, history shows that gold usually settles back eventually. लेकिन हम Indians के लिए gold is an emotion after all. So even when the market gets rocky, let's trust that gold's lasting value will keep shining bright, giving us a sense of stability in the world that's always changing.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.